This is Expat Stacker, and in today's video I want to talk about the gold to silver ratio. Actually, I wanted to talk about that yesterday when I did an unboxing for this Comsco 1 kilogram bar. I tried to talk about it, but I was a little too exhausted. I'm still tired, but I think good to talk about it now. One thing I did want to show this time is the security feature here on the Comsco bar. So if you look at it there, it says AG, which of course is the periodic symbol for silver. And if you rotate the bar a little bit, you're gonna see that it changes to say Un. You can see the Korean word here for silver. Un. So over here AG, and then over here it changes to Un. So I think that's a pretty cool security feature. Sorry for the glare there. One interesting fact I recently learned about silver from Silver Dragon's channel is that silver is the most reflective metal. That's pretty cool. Alright, so, but for the topic of this video, what I wanted to talk to you about is the gold to silver ratio. So some people would call this the GSR. Also, if you're looking at, for example, TradingView or other indices, you can type in XAU, XAG, and that will show you the gold to silver ratio. And just in case you don't know, the gold to silver ratio is how many ounces of silver it takes to get to 1 ounce of gold. So over the past 5 years or so, this number has fluctuated between anywhere between about, like, I would say mid 50s or 60s all the way up into over 100, and currently it's at about 70 right now, which is quite low for the past, I'd say, 2 years. And so some people stack silver with the idea of, the silver to gold ratio is very high, meaning it takes a large amount of silver to equal 1 ounce of gold. So currently it's around 70 something. So I have 2 kilo bars and a 10-ounce bar here, and also a 100-gram bar. So altogether this is about these are 32.15 gram each, so 64.3 plus 10, so 74.3. So this would about do the trick. And just for good measure, let's just throw this on there as well. 77, just in case it goes up or something. And this over here, we have two half-ounce American Gold Eagles. So together, of course, they equal a full ounce. Now, when you're doing a ratio trade, I don't know that you would be able to get two fractional pieces in a ratio trade. It really depends on who you're dealing with. They might ask you to accept a full ounce. And also, this is sovereign bullion from a country. And Comsco bars are also sovereign bullion. They're government minted. But these two pieces are generics, and I do think that is important. Some people may argue that the premiums, or whether or not it's generic or premium government minted bullion, is insignificant, but I think it does matter, because when you sell this, right, when you sell this coin, you're going to be able to recover some of the premium when you sell it, because it is government minted bullion. That's kind of the point of government minted bullion. And of course, that's not only true with the American stuff. Something like this, which has some semi numismatic, semi collectible value, this is also backed by the government of China. So this is premium government minted bullion. So you can recover some premium on this depending on where you're selling. Of course, if you're in Canada, then probably the safest bet would be Maple Leafs. If you're in the United States, then American Silver Eagles would probably be the best. But premium government minted bullion, generally speaking, even if it's not from the nation that you're from, will recover a premium. Whereas generic bullion you'll either get spot or slightly below spot for it if you sell it. We're talking about trading though. But the whole point of trading is to play the difference in a ratio as compared to the spot price. So the price that you would sell at does factor into this decision. So with all of that in mind, I think that's kind of the basic background information enough for you to understand my opinion. I'm going to give you 5 things that I think you should think about and know before you decide to go ahead and make a ratio trade. So, I've seen many videos on YouTube recently talking about this subject. So, it's very easy to persuade yourself that it's a good idea when you hear many people talking about it. But what is your overall goal? Silver Conundrum had a very good video recently talking about goal settings and thinking about why you're stacking. I also made a video kind of on a similar topic, but basically the point is, guys, is to think for yourself and to not get sucked into thinking about doing something because you saw that it was a good idea on YouTube videos. So you got to have your goal, your reason for stacking. Why do you want to do a ratio trade in the first place? Me personally, I'm not interested in doing ratio trade. In my opinion, gold and silver are similar. They're not exactly the same, and I think a lot of people maybe make some mistakes about that. They tend to think that silver is basically gold junior, and sometimes it is, depending on what you're talking about, right? If you're talking about general market trends and things like this, then I think it's safe to say that in some circumstances or situations, then that's all right. But gold and silver are also very different. Gold is more of a monetary investment metal. It does have some industrial purposes as well, but mostly it is for invest is a monetary metal. It's different to silver in that regard because silver is also a monetary metal, but it depends on who you're talking to, honestly. Some people, some companies, they see silver more as an industrial metal, straight up. That's what they think about it as. And obviously, it has intrinsic value, but they don't really look at it as a monetary metal. Now, some people do look at it that way. I personally do look at it that way. I think that there's a long history to support that idea. And I think that silver is also very undervalued and has been undervalued for a long time. If you look at the past 100 years of the silver and gold ratio, there have been points where it's been 20 to 1 or 30 to 1 or 15 to 1. And you can also see a very big difference in the way that the metals behave before and after the United States went off of the gold standard. Before that, they were a lot more correlated, I feel like, but after the United States went off of the gold standard, they became very discombobulated, and the gold to silver ratio is a lot more volatile. There's no guarantee that the gold to silver ratio will ever return to previous levels. There's no guarantee that it'll go down to 20 to 1 or 30 to 1 like it just because it was in the past. Just because something happened in the past does not mean that it's going to occur again. It's a very typical mistake that human beings make. So I'm not stacking with that as necessarily as a strategy. Just like I'm not really a doomsday prepper. However, if gold, the gold to silver ratio got down to 20 to 1 or 10 to 1, yes, it would be time to seriously start to consider to trade in some silver for my gold. Or if there was a doomsday situation, first of all, I have some preparations in place, but that doesn't mean that I think, that doomsday is coming for sure. I just like to be prepared. That's all. So, I have food and other preparations in place, but I also have precious metals. So good for me. So if the preppers are right, then all right. But that's not why I'm doing this. What I think is probably the most likely outcome for my life, what I hope is the most likely outcome for my life is I have a career, I work, I raise my kids, I retire, I'm able to take care of myself and my family and have safety and stability for them with these precious metals, and hopefully it can be a generational asset which I pass on to my children. So I'm stacking for the long term. That's my goal. So there's no real reason for me to want to play the gold to silver ratio. I have a silver goal. I'll tell you right now, it's 11,000 ounces. And I have a gold goal, which is 300 ounces. So yeah, pretty ambitious. And I have a long way to go. I've only just started on this whole journey for a few years. But those are my goals. So there's no reason for me to want to play the gold to silver ratio. I see extreme tremendous value in silver. I think silver is undervalued, and I don't necessarily think that when the silver to gold ratio gets closer together, that that's an opportunity for me to strike, because I think silver has properties and value that gold does not have. For example, there's a lot of pent up industrial demand for silver right now. That same demand does not exist really necessarily for gold because of precisely what I was telling you before. Gold is more of a monetary metal. It's a safe haven asset, and some people look at silver that way. But I would say the big fish, the institutional investors and things like that, not so much. A lot of this recent investment demand in silver, um, has been coming from individuals and some institutions as well who know what's going on, who pay attention, and but that doesn't mean that they view silver as necessarily an investment metal. So if silver and gold have different properties, they're going to behave differently. And as I just mentioned, and as I'll show on the chart, uh, gold and silver ratio has been much, much more volatile, much more unpredictable uh, since the United States went off the gold standard. So basically, makes it a lot harder to predict. And if something is very unpredictable, I don't think that makes it a good premise for a strategy. Okay, so basically that's number one is what's your goal? What's your reason for wanting to do it in the first place? Is it part of a sound strategy that you've developed and created, or is it because you saw many people talking about the gold to silver ratio on YouTube? Okay, number two, the second thing I think that you're gonna need is a ledger. So for me, I have a record of every single purchase that I've made in gold and silver. What it is, where I bought it from, how much I paid for it. And since a lot of times I'm not paying in US dollars, I also write down the conversion rate. And I used to adjust my dollar cost average after every single purchase, but that became a little bit tedious. So I just do it at the end of the year now. But honestly, I don't really care about the current spot price all that much. I believe in this money. This is money right here. Okay, the paper that I exchange for it isn't money. It's currency. I need it to take care of basic needs, food, water, shelter, those things. So it is important. I'm not trying to say it's completely unimportant, but it isn't money. So I don't really care. That much about the spot price as long as I've got enough fiat currency to take care of my needs and have some reserves for safety because you never know what's going to happen, then I'm good. Um, but I have a ledger of every single thing I've purchased, when, and how much I paid for it, and all that stuff, where I got it from, and everything. The reason why is because I might need a record of that. Let's say I do decide to. Let's say I'm wrong and the gold to silver ratio does drop down to, um, let's just say 15 to 1, right? Okay, I got to do it at that point, right? I have to trade some silver. I'm not going to trade in my whole stack, but I got to trade some silver for gold. It would be ridiculous not to, right? So what pieces am I going to trade in? Well, I'm going to trade in number one, generic, not premium government minted bullion, because of what I said earlier about the sell price, the difference in the sell price. You're going to lose money if you trade in premium government minted silver bullion for gold, when you could trade generic silver for premium government minted gold, because most of the dealers that you deal with when you do a trade, they'll just count it ounce by ounce, right? So you can give them generic and they'll give you premium government minted gold. So why would you not take that deal for yourself, right? So but also, I just bought this bar, right? So let's just say that I want to all of a sudden do a trade tomorrow. Well, I need to make sure that when I bought this, the price was low enough, right? Because I just bought this one. Now, a kilo bar that I bought 2 years ago would be better for me to trade. Number one, because it's generic, and number two, because I paid a lot less for it. And if the spot price of gold is up and the spot price of silver has increased, then that particular piece of silver is the one that's going to be profitable for me. That's how I see it. So that's why you need to keep a ledger, a record of everything that you've bought in order to make it profitable. Okay, the third point, moving along here, because I spent a lot of time on background information and point number one. Moving along here, I would suggest that you set a GSR price point, gold to silver ratio point, where you decide, okay, this is where I'm going to pull the trigger. Decide before it happens, okay, guys, because you don't want to be trying to, weigh your options, and your emotions are going to be weighing and stuff. If the gold to silver ratio is fluctuating and stuff, you're going to be worried about timing and all that stuff. Just set the number way before it happens. Okay, for me, it wouldn't even be on my radar until 50 to 1. I wouldn't really start to think that it's going to be a possibility until 40 to 1, and then at 30 to 1, that's where I might go ahead and start trading some in, and anything below 30 to 1, I would have to trade some in as well. So those are my numbers. I suggest you guys go talk to your local coin shop owners, other people here on YouTube. What's your number? Go ahead and leave it down in the comments. Tell me what's your number for the gold to silver ratio trade. All right, the fourth thing, actually, I kind of already talked about it, but that's understanding the differences between gold and silver. Gold is investment metal, and silver is more of investment plus an industrial metal. So that means that there's different demand drivers. Honestly, I believe that that's why part of the reason why the silver premiums went so crazy earlier this year in 2020 is because there's a second demand on silver when all the mines were shut down and everything like that, right? There's this second demand that's pulling on silver. So not only the industrial demand, which they wanted probably to keep low for businesses, but also the investment demand, right? There's investment demand that's weighing on it as well. So we're the ones that got stuck with footing the bill because investment had just skyrocketed. So, and I believe that once economies start opening up once again, we're going to see actually another increase in the silver price, especially. So I believe at that time the gold to silver ratio will go down even lower. And that's because there are industrial drivers for silver which are increasing. They're on the rise for the foreseeable, future. Definitely within the next decade, we're going to see exponential growth in not only silver but other metals that have industrial properties, such as copper, such as platinum, such as palladium, and the last point, guys, the fifth point. Like I kind of already touched on this one as well, but the fifth point is you don't have to trade you don't have to do the whole entire gold to silver ratio. So right now it's about 70 something to 1, right? So I would have to trade all this for this. Would I do that? Absolutely not. I would not do that right now. But let's say I go to, the bullion dealer around here, and I meet another expat, or I meet somebody in there and we just start talking, right? And they say, oh, like I just started stacking, and I have some gold, but want to get more silver, blah 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 blah. And let's say they had one of these. Okay, this is a 10th ounce, right? So would I trade 7 silver coins for this? I think I would, actually. I think I would do that. So I know I just said that I wouldn't trade government minted bullion, but first of all, I don't really have that many generic coins. Most of my generic is in bars. So, but I'm just using these as an example. These are pandas. One, two. Oh wait, that's not a panda. Anyway, 2, 3, 4, and 5, 6, 7. So would I trade these 7 coins here for this 10 ounce of gold? Absolutely, I would. Would I trade all this for all of that? No. It's the same ratio trade. It's just a fractional trade. So just keep that in mind as I throw silver all over the place. Uh, just keep that in mind. You don't have to do uh, the entire ratio trade. You can do a fractional trade as well, as long as the person you're dealing with is willing to do that. And if you want to get more into gold, or you want to get more into silver, let's say you went really heavy in on the silver first, like a lot of stackers do, and you want to get more into gold now, but the price is high and you're feeling like it's out of your reach, go to your local coin shop and see if they will do this trade with you, a fractional GSR trade, and you might be able to get a 10th ounce of gold for some smaller, more manageable amount of silver, where it's not going to take out your whole entire silver stack, but you can still get a nice, decent piece of gold. 10th ounce, really good. Guys, this right here is for me like a trip to the grocery store for a month, at least for my whole family. So like, if that keeps up, by the time I retire, if I have, let's just say, like 50 or 60 or something of these, that's like 5 or 6 years worth of groceries, guys. And I have a long way to go until retirement. So to me, I'd totally be willing to do that. But to me, gold and silver are part of the same asset class. They have a lot of similarities. They're like brother and sister or whatever. They're related, but they're also very different. And I don't know what's going to happen in the future, but I see a lot of more growth potential for silver. I don't think it's speculative. I've heard some people say that silver is speculative. I don't think it's speculative. I think there are a lot of reasons to believe in silver, and we just need to wait. Um, so, guys, that's my take on the gold to silver ratio. I'm not doing it. I mean, I'm not planning on doing it. I don't stack with the intention of doing it. But, of course, if the gold to silver ratio got to a point where it was too good to pass up, then yes, I would do it. But I would probably do something along the lines of this um, first, just to see how it goes, and then later on, maybe get into bigger pieces of gold. So anyway, guys, that's my take on it. You guys tell me what you think. What's your number for the gold to silver ratio? And if you would do it, why would you do it? How does that fit in with your goal and your strategy? All right, guys, hope you enjoyed the video. This is Expat Stacker, and I'll catch you on the flip side.